Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from Fox Business, Fox News, columnist for the New York Post, with my partner in crime, the granddaddy of data, the only man alive that can speak Japanese, and worked at a hedge fund. On a trading desk of a major investment bank, and on top of that, provides the best data to all of Wall Street through a company known as S3 Partners. His name is Bob Sloan, right here. That is a trifecta. You speak Japanese. You work for First Boston for many years.
Yep.
And you provide great data to the trading community.
I know. It's rare you get to
I don't know anybody that's like that. And that's why I'm so proud to be here.
You're too kind. I got to be a very senior guy at an investment bank. Very, very, very senior guy. The most senior we could be. And then, one of those things, you decide whether you're a platform person, you want to go work for somebody else, or do you want to be your own boss?
It's kind of like the Mike Bloomberg.
Yeah, a little bit. I mean, it's a lot smaller,
right. But it's your baby.
Yeah, that is like priceless. To have that kind of freedom is worth almost any amount of money. When you can call your own shots and you can do your own thing, it's a priceless thing. And we're very proud, actually.
And you should be.
And last week, we were on Bloomberg TV. We were on CNBC.
I saw.
Thank you. And we've built this company. It's taken 24 years, so it tells you how hard it is. To actually be part of the financial infrastructure. It's very, very, very difficult thing to actually do.
Yeah, I mean, and one thing we should point out is that S3 Partners data is the number one independent data provider on the Bloomberg network.
Yeah,
that's one of the fascinating things about Bloomberg, and one of the great things about it, in my view, is that it's kind of like open architecture. They literally they don't really discriminate. The reporters are pretty good at giving other people credit if it's a news story, because it's market moving, and they want to feed the beast, which is the information flow of the markets, which keeps liquidity going.
Yep.
So it filters down everywhere from the analytics part to the data part to the reporting part. So it's an interesting organization.
They taught, one of the things that they taught me was that data drives news and news drives markets.
Yeah, that's
true.
And
that's why you see TV and news and data as meshed together. And, the one amazing thing that company has, and no one really thinks about it, is that everyone in the company has a terminal, which means they can communicate with one another instantaneously. So the record of customer interaction is not fragmented at all. It's one.
No, it's
a major strategic advantage to that company.
Mike Bloomberg is a brilliant guy on so many levels. I once read a quote from him that said, it was like, I think they did a New York Magazine early on, did a profile on this before he was like huge, before Bloomberg was huge.
Yeah.
He said, I'm not the world's greatest Wall Street expert. Remember, I think he was on the capital markets of Salomon Brothers, right?
Yes.
Okay. I'm not the world's greatest expert at technology, but I'm probably the best at the confluence of technology and Wall Street. And that's what allowed him to kind of create Bloomberg from scratch.
By the way, as big as they are, as much press as Bloomberg gets, people forget, like, they were the first cloud-based computing business.
Yes.
They had LinkedIn before there was LinkedIn. They had Messenger before there was Messenger. They've had so many different innovations that are part of that package to keep you there, that if they had spun out all these things, it'd be even bigger.
And he's worth how much? 100 billion?
Oh, I don't know.
It's in that
ballpark. After that, it's all charity. Literally. It actually really literally is.
And it is.
And it is.
Bloomberg Philanthropies is pretty big, and does good work. All right, enough of humping Bloomberg. As much as I like those guys over there, and you like them, we have a lot of mutual friends there. Couple stories that I'm working on, and you were talking about news drives data.
Data drives news. News drives markets.
Okay, so here's where data is driving news right now. The news is that we're in the middle of a crypto winter.
Yeah.
The data that drove that, in my view. Now, what do we mean by crypto winter? we hit a high of $120,000 on Bitcoin. It's now about half that. It's around 60,000. The whole market has lost like $2 trillion worth of market cap.
Well, I don't know if it's that much.
Oh, it's that much. It's half.
No, but all of crypto is like 2 trillion. So maybe
all of crypto was 4 trillion.
Was it really?
Oh yeah.
Well, was that right?
Dude.
Okay. Fine. I will defer.
If I'm wrong, I'll eat my hat.
Okay.
And you notice I'm not wearing a hat. But anyway, it's a major decline. The data that was driving this is massive leverage. When it hit that 4 trillion or whether it was 3 trillion, market cap, I guess, you brought in a lot of speculators using leverage. And the minute you hit a road bump on something like that, you have an unwind. And whenever there's leverage that's unwinded, the downdraft sort of, is exaggerated to a large extent. The question is, you're going to hear a lot, and I've been talking to people, everybody from Larry Fink types to Anthony Pompliano types.
I'd like to know what he has to say.
Well, Anthony's interesting. Anthony's still a bull, obviously.
Yeah.
And, I think if, long term, I think Larry would be a bull as well.
Yeah.
For a lot of reasons. But they will tell you that, there's a lot of technical factors related to this, but the business is here to stay. I mean, we're not, there's been like, I went back. I always thought there was one crypto winter, and there really wasn't. I always thought the one was in 2022, when a confluence of things, including Sam Bankman-Fried's FTX blowing up, and you had a sharp decline. I think a 70% decline in crypto prices, Bitcoin. Usually Bitcoin reflects the overall market, just so you know. It kind of follows. It's the biggest one. It's the sort of bellwether of all the digital assets. And you had like a 70% decline. But remember, we're at a 50% decline from 120. You had your 70% decline from whatever it was, 60. I don't know.
Right.
There was a crypto winter in 2020.
No, that's right. It went down to like 14 or 16,000 or something.
I think it was 4 in 2020. I think that was 2018, because there was another crypto winter in 2018.
Right.
So let's just say you kept it, you held from the last crypto winter, and this is the point that Anthony made, in particular Anthony Pompliano, who we should have on the show because he's a really smart guy. Financially,
let's do it.
Real good, smart guy. I mean, if you think about it, if you want a long-term investment, this has proved to be a pretty good one in the not too long term. So, people will tell you, like, if you put $1 in the S&P from 1930 to now, you made what, millions of dollars, right? I mean, I can't remember the number, but that's the old saying. In crypto, if you put $1, if you bought at, you didn't, not even that long of a time frame. If you bought at 2020 and just rode out the various crypto winters that came after it, or say 2018, you made a ton of money, even with the sell-off now. It's interesting. Even on a short-term basis, if you held it semi-long term, you're making money on this thing like no tomorrow, like 1,000% up since 2020. I think I looked at it, 1,100% up, while the S&P is up like 200% or something like that. So remember, it's there's something here, and I think the other thing is that what's different now is that you do have so many players in there building out the infrastructure, and it's more than just Bitcoin space. There's exchanges, there's the blockchain, which people are putting money into, using it as a transaction business. I interviewed Adam Winnick, who runs a venture fund or a hedge fund that specializes in crypto, and he will tell you that a lot of the AI stuff is using blockchain technology, and so this is here in one way or another. The coins will be very volatile. By the way, another reason why you have a sell-off in the coin is that a lot of people like stable coins, like they're going for that instead of buying the more volatile instrument itself. So those are the reasons why it's off. I think it goes down further, to be honest with you.
But we have the data that says it probably will too.
What does it say?
So if we look at MicroStrategy, by the way, we've had probably 2 of the 3 most influential people in crypto on this show, right?
Yes.
So we had CZ,
CZ.
obviously, and he was saying, stay the course, don't we? Because we asked him.
Right.
And we had Chanos on when he had his spread trade on.
The opposite side.
We had the opposite. Well, he was basically saying that the marketplace was valuing the company way more than
He saw an
than it should.
arbitrage opportunity more
Correct.
than he was making a sort of
Correct.
fundamental
It was
bet on crypto.
that's exactly right. So, well, he wasn't short crypto. He was just saying that there's an arbitrage that's out of whack. I'm going to take advantage of that. We asked him at the time. We said, hey, how is this different than any other strategy that is reliant on funding, raising money to go out and buy more assets to keep the price high? And he said, oh, it's not really like that, but that's exactly what it was.
Yeah.
So, I think as smart as Jim is, sometimes the asset liability thing can escape everybody. So,
Sure.
And so, what are we seeing here? We have a break-even price of $70,000. They've issued all these converts to keep supporting the price at that level. It breaks that level. And what do we see? So one of the things that we've done at S3 and the data company, what kind of data company are we? Positioning there's a great piece put out by Citadel Securities about modern market structure. And it reads like, it's really a great primer. If you really want to understand everything that's on the show that I'm talking about, I almost want to read like 3 pages from that next week because it really gets to the point of why stocks go up and down. And we've always said that it's positioning. And if you go to our website, you'll see it's positioning. And this is what we do. It's both the long and the short side. So MicroStrategies
is signaling that this thing is going to go down further?
Yeah, because if year to date, if you look at active and passive investors, they've purchased a combined 56 million shares in micro.
Oh.
And we've had 5 million shares sold short. That's the short interest. So how did the price decline 45%? Well, the firm issued 70 million shares. I buy 56, I issue 70. The price is going to go down. It's very simple.
Dilution.
Well, that's right. It's dilution, and you've got a supply-demand imbalance. And so so what does that say? You need funding to keep buying the asset. And as long as he needs funding to keep buying the asset, the price goes down, the more funding you need, right? It's a vicious cycle.
And MicroStrategies, just for the unacquainted, is a proxy in many ways for Bitcoin, right?
Correct.
And it's signaling more to go down.
Yes. And so if you look at short interest, you look at passive long interest and active long interest, it's very clear from the chart that we have, and you can see it up on our screen.
So I hate to say like when you should start buying, but
you don't know.
Catching the bottom is always the worst thing in the world.
Well, the thing is, someone has to fund it.
Mm.
So the real question is not when you buy it, is can the financing and the money keep flowing?
Yeah. So who is the marginal new buyer in this?
Well, the new buyer, that's a good question. It could be Saylor himself. It could be he might have a side fund that he's doing for himself, and he might be doing it through a company.
Might say forget about eBay.
I'm not trying to say he has this or doesn't have this. I'm just saying you're asking who the buyers could be, and that's certainly a potential.
Because you see, one of the things that scares me about Bitcoin and crypto right now is that I don't see the marginal buyer stepping in anymore. So you have the ETFs already there,
right? Well, let's talk about that.
But just let me make this one point. So you have the ETFs already there. You have the people that are holding the maxis, like Anthony Pompliano, who is holding, maybe buying on the dip, strategically. But he has to people like that. I don't know his portfolio, but theoretically, people like that are more diversified as well. The Chinese are out now. I had heard there was a number that was floated to me that the Chinese, and it's illegal to own Bitcoin in China. But they once represented like 20% of the market, and the government's cracking down on this stuff. So they're kind of like out.
Mhm.
So who is, I mean, is there, Venezuela? I mean, is there like a place because they don't have a currency that might step in? I mean, I don't know.
They've issued converts and other debt instruments to raise money to buy Bitcoin. That works in a, sorry, buddy. That works in a rising market, right? Falling market, you need more money, right? You just got to keep more and more money to cover your bets. Right? So you got a funding problem. That is a liability problem. They got to keep supporting the price. If the price goes down below its break even, you got a big problem.
What happens if it does that?
You got to one, if there's interest to pay, you got to pay it,
Right.
and you got to support it. And two, if you're the buyer in the marketplace and you can't raise money to be the buyer in the marketplace, the price falls. He's the bid. So if you look at what's interesting to us,
It's
if
a
you look
scary
at that,
thought that if he is the
well, this is
only
what we
bid-
said about a year ago.
You said it.
I did.
I didn't.
And I
remember you saying
I wish I'd actually stood my ground a little bit more because we've seen this. We've seen
Yes.
this many, many times. I mean, David Einhorn wrote a great book about it, about outlet signal. This is no different.
What did he say about Alex?
Basically, that as long as the company could be terrible, the asset could be terrible, but as long as the funding was there, it was really hard to short the stock. You were not really shorting the fundamentals of the business. What you needed to be wary of in shorting the company is that as long as there was a dividend to be paid and that could be financed, people were going to be able to raise money because they needed the yield. And the business was terrible, and there's all sorts of different shenanigans going on. This whole charade. It wasn't a charade; it was an actual thing.
Right.
But it's very similar. So as long as Wall Street was willing to finance Allied Signal, even though he was right on so many different things about the fundamentals of the company, it really didn't matter. It's all about the funding.
It's kind of like what happened with Elon. Now,
About the funding.
Being able to get funding got him over the hump where he did improve and we're talking about with Tesla, he did improve the fundamentals. He got his factories working right. He's got production moving. But, if he didn't have that, he actually said it. If they were looking at bankruptcy at some point, he said it. I'm not making this up. Let's put a pin in this because we're going to return to this, I guarantee.
Well,
next week, unless you have anything else.
We got more to do. We got more to do with this. So one of the things that we should point out is if we can pull back the IBIT shares, just show that again. So you're asking, where's the bottom? Look at the short interest on IBIT, right? It's the Bitcoin ETF.
Whoa.
Rising
Dramatically.
Price falling. Eventually it gets bought back, right? Now the question is, these are shares obviously tied to Bitcoin. So there's huge negative sentiment. And at some point these things get unwound. So I think one of the things, if you're buying Bitcoin, you should be watching is the short interest in this particular ETF. And if you see covering, it's probably signaling a bottom. But then you have to look at micro and their access to funds. That's the number one thing.
Yeah, they're the gorilla in this market.
No doubt about it.
Or
Or at least the most watched, and he's certainly the most...
what has he said about this?
Oh, he can't say anything, right? I mean, he's got so many different public securities out there. He can't. It's very hard for him to comment.
I haven't heard a word from him. I thought it was interesting. Okay, we're going to come back to this probably next week. We'll see if winter's over, crypto winter.
Well, speaking of winter, what do you think about what's going on in Europe and air conditioning? We had Jillian Ted on, and I asked her, I said, here are 3 words, right? Like, what are the, why does China hate the word cousins, right? And we asked about that. And we said, why does Europe hate air conditioning? And she laughed.
Well,
it turns out we were right. They hate air conditioning.
Some of this is cultural depending on where you go in Europe. So now I have family in southern Italy, okay, which is an interesting place because it's
be super hot.
It's not only super hot, it's kind of near Africa.
Right.
If you think about it. It's not real Europe. It's a different ball game. Okay. So it's different than northern Italy. It's not, Naples is a lot different than Paris. If you see the people, there is a political animus to air condition in big parts of Europe. The sort of woke sort of notion that it's bad for the environment or whatever. They're using electricity that based on environmental factors, and we don't need to get into all that, increasing CO2 emissions, whatever. Even though we should point out that people die of heat exhaustion, much more prevalent than.
Yeah, but they're denying it to patients in hospitals. I mean, this is crazy, Charlie.
It's so stupid. But in southern Italy,
you should suffer because we don't want to cool ourselves down. It's crazy.
So that's part of it.
It's crazy.
But in southern Italy, it's not. Listen, I haven't been to a hospital in southern Italy, and I never want to be in one. But just the way people live, they believe it's physically bad for you. They believe you catch drafts even in the summer. And and by the way, they don't really complain about it. So what's interesting about the Southern Italians is they're not sitting around blaming the U.S. for because that's what they're doing in Paris, apparently, blaming the U.S. for climate disasters and Trump and this. They don't blame anybody. They just deal with it. It's hot. It's been hot there for centuries. They know how to deal with it, and they kind of like it. And I'll tell you, when I went there, I want to say it was 3 years ago. I did a summer vacation just because I had to see my father-in-law there. We're in a small town further south than Naples, further south than Salerno, a little bit in the mountains. So I go and I'm like, oh, this is interesting. We're going to this restaurant. I'm looking forward to eating some good Italian food. And I see these big fans and I see vents and stuff. So I say, well, they have air conditioning. This is great. Lo and behold, no fans on, no air conditioning on, just the windows open in this sort of outdoorish sort of patio thing. And I'll never forget, I'm eating spaghetti and I'm sweating. The sweat is dripping down my face, down my back. And I was like, I can't deal with this anymore. Now, it didn't bother them. They were okay.
They were having a double espresso in the middle of 115 degrees. They didn't care. They could care less.
They were like old ladies just, slurping down pasta. I mean, they don't care. I mean, it's just, it's in their blood and stuff. So, it depends on where you go. I don't know what they do in hospitals down there. I kind of think that Southern Italians are maybe the most.
But this is what's going on in France, right?
U.S. friendly people in the world, just so you know, because they have family in the U.S.
Right.
So they like the U.S. You know what I'm saying? And they're very culturally conservative.
Yep.
But France and all these other places, we're talking about woke on steroids. I wouldn't want to be in a hospital.
I just think it's kind of ludicrous, right?
Oh yeah, it's just disgusting. And by the way, they don't bathe.
Well,
they don't bathe.
Yeah, well,
they smell.
Really?
It's horrible.
Are we going to go there on this show?
It's horrible.
You're really going to go there with the French and their hygiene?
I'm telling you,
honestly,
people in Europe do not bathe like we do.
I don't know. The fountains look pretty full right now. It looks like
you imagine drenching yourself in that as a bath. You would never do that.
No, never.
By the way, that's so unhygienic. Italians, I will say this about Italians: they're incredibly clean. They clean everything. Now, Southern Italy, they clean everything.
Right,
everything is wiped down 50 times. It's because they've gotten through plagues and everything. But they don't like to shower.
Listen, I don't know.
I
think the American way of life and how
you're trying to be politically correct. You don't want to piss anybody off.
You
have clients in Italy, so
we got tons of clients all over the place. I'd rather not comment on their hygienic habits and their hygiene. But I did see the news stories, and it did remind me of the conversation we had with Jillian about that. And lo and behold, we're like, why do you hate air conditioning so much? Because, as you said, it's a cultural thing.
Well, some of it's political.
Yeah. But when I meant to say culture, I meant political.
Well, the cultural thing is different. That's like old. This goes back centuries.
No, but it's merged now.
So my wife went to Italy once with her father when she was a kid. She was like 10. It's a true story. So she got a cold, kids get sick every now and then. She got like a head cold, sneezing, coughing. They stuck her at a courtyard and said, sit there under the sun.
We need vitamin D. We've been indoors for 200 years. For 30,000 years, we were outside getting sun.
Now, she hated it. She didn't do it it wasn't like torture. She didn't put her out there for 2 or 3 hours. She did it for a time. She did kind of get a little better. Talk to her about it. But anyway, that's kind of how they think in those remote southern areas. And this is like wives' tales because they had to get through the day without like proper medicine and stuff. And,
right.
And a lot of it worked. It's very poor. And they still carry that over.
Yeah.
When I want to eat my pasta, I like air conditioned, by the way.
I'm a big fan.
Yes.
Huge fan.
One more story before we get to your stuff, which I'm looking forward to, Bob. Is Comcast. They announced today that they're spinning off what's left of their media properties, namely what's left of NBCUniversal. So Comcast, let's rewind the videotape a little bit. I was at CNBC back in 2010. I remember when it was announced, we were at dinner. I was with some CNBC people. We knew it was happening. We couldn't report on ourselves. And I don't know how it broke. I think someone at the Journal broke it. We couldn't report on it.
Right.
That Comcast was in the process of selling itself, buying NBCUniversal from GE. Now, GE was this massive conglomerate at the time. It still wasn't imploding just yet, but the sort of beginnings of that implosion that essentially led that led to Jeff Immelt leaving, another CEO leaving. I think his name was Flannery, and the company just being broken apart into a million pieces.
Yeah.
Where it is now, which is actually the stock's been pretty good now.
Mm-hmm.
That sale began in 2010. The first tranche of it for like $30 billion occurred in 2011. The second tranche of it occurred in 2013. So Comcast buys, which is a distribution network. And this is like what all the bankers are saying. You could put together a conglomerate of media, even though the conglomerate of manufacture, traditional conglomerates like GE weren't working.
Mm-hmm.
But this media conglomerate model can work, where you control distribution and content, right?
I hear you.
Right after that, what happened? Well, AT&T, another distributor, right? They have wireless. They don't. Comcast has more cable than wireless, but they do have wireless now. They do their own thing, right? They buy Time Warner. And there's been other examples. Everybody's adding to content, trying to kind of get this model of distribution and content together. Bankers make a ton of money. And then what happens now? Now they're all breaking up.
Yep.
Now tell me, is this like a scam? I mean, bankers put together these things. By the way, this happens. We're on the
the bankers don't do it. They recommend ideas. It's the management
a little
the
tough
board.
But I want to say we're on the eve of the great media banker sort of clusterfuck in Sun Valley, Idaho, called the Allen and Company Conference.
Well, it's not a clusterfuck. It's where all the media moguls get together.
I hate it. I know. I used to cover it. And by the way, I got thrown out one year. So
that has nothing to do with anything.
The security is very overzealous there.
Yeah.
And one of them picked on my producer, and I told the guy in not so polite terms to stop.
Buzz off.
And
right.
It just got worse, and then they threw me out. And I've been writing about it ever since. Which is probably that's why they don't.
This is why you want to stay on Charlie's good side.
But this is why they don't invite me there, I guess, to moderate any panels. But in any event, so with these confabs, they come up with these ideas. Oh, let's merge Comcast with NBCUniversal. Oh, AT&T. Well, those bean counters at AT&T know how to run a network. So let's put together Time Warner. And then none of these things work. I mean, like Comcast stock since reached its high in 20. First off, if you do a straight line since they finished the merger, I guess in 2013, the stock hasn't moved. It's 30% off its highs from 2021, I think. I mean, this is like a problematic company. AT&T was a disaster after they bought Time Warner. And they even fought. The Trump administration tried to stop, the Trump one tried to stop that deal. And they actually spent money fighting it. I broke the story that they were both going to be sued and that they were going to fight it. I remember getting an exclusive interview with Randall Stephenson, who was then the CEO of AT&T. It was at Sun Valley of all places, where I snuck the interview in before one of the Goon Squad security could stop me from talking to him, because they used to stop me from doing interviews. So my bigger question is, Bob, why have this stupid conference other than because all the big ideas that come out of this usually suck?
Because organic growth is really hard. You know this in the media business. The only way to grow is inorganically.
So
you have to acquire
so
things.
It's just churn. That's all they do is churn these deals.
Well, I don't know if it's churned.
It is. And
you got to put something together to grow. That's why your stock price is where it is. You got to show growth.
And then, as you know,
you have to either have to show growth, or you have a business model that will give you a great dividend and stability.
The bankers make a lot of money. So then the bankers say to AT&T, well, it's not working out. We know. Let's sell and create Warner Bros. Discovery. That happens. And let's face it, that didn't really work out. The stock was languishing for years before David Zaslav did something really smart. That's the head of Warner Bros. Discovery. Started a bidding war because he had some good, decent content and he had some good properties. And he got, so I think, I want to say that AT&T bought Time Warner for 80. They recouped about 40 billion from it on the sale. Zaslav then sold it for 80. That's not great time value of money if you think about it.
Who says that all strategies are successful?
But these are none.
Well, what does that say about the media business?
Listen, I'm in a shit business.
That's why we do
this podcast.
Well, but that is my point, is that the explosion of podcasts and explosion of independent media, people are voting with their feet.
Yeah, it's interesting. So there's a bunch of highfalutin journalists that are going to do moderate to the Sun Valley thing. I don't want to name them. A couple of them are my friends, so I don't really want to say anything bad about them. But what is their audience compared to Claviculars? You know Claviculars? He's this YouTube sensation. He's like a man.
Oh, the guy YouTube's going to be massively bigger.
What they call man maxing or something like that. Looks maxing.
Okay.
So he tells kids how to look better, how to work out. He does this thing where he tells the kids, because he's in his late teens,
no, I've seen that.
Hit your face with a hammer and break
the bones, and he tells them how to.
You look tougher.
If you stick your tongue at the top of your top of your mouth, you can get your chin out like that. Whatever.
If you do that a lot, your chin will just automatically
do all this.
And this clavicular. I mean, if you think about it, if you really wanted to hire, bring in some movers and shakers who get gazillions of followers, Allen & Company should bring in clavicular. Don't you think?
Why don't you write a column about it?
Oh, I am. Or Joe Rogan. By the way, Joe Rogan talks about UFOs. It gets millions of people listening to him. He talks about everything. He actually gets I'm not putting him in the clavicular category, but Joe goes out there. I mean, I don't know personally, but I'm a diehard listener. He gets millions of people listening to him about UFOs and crazy shit.
But he doesn't have enough. Well, I don't know if he doesn't have enough money, but maybe he has
so much money.
No. There's personal money. Absolutely, I understand. And then there's corporate money that you need to actually buy one of these companies. I mean, you spent a better part of the fall talking about the purchase and acquisition and saga.
Well, I think
I
think you missed my point. My point is that the real media power has been dispersed.
I'm saying the same thing to you.
Okay.
I know I'm agreeing with you. I'm just saying
that
in order to do some of these deals, it's billions and billions and billions and billions of dollars. By the way, I think if Joe Rogan actually hired a banker and said, I want to go issue debt and I want to go raise $2 billion in a SPAC and I want to go buy something, you could probably do it.
Right.
But that's not his gig.
And he doesn't want it. And he controls his through the Spotify, whatever he does. So, but my point is, it seems like after you go through these exercises of creating and unwinding deals, and you realize the shareholders don't make a lot of money on it, don't really do well. The bankers cash a check. The industry isn't better off for it. You sort of come to grips, and that the fact is that the real juice of media right now is with Clavicular and Joe Rogan, and maybe us,
and risk and return,
and maybe
risk and return, my friend.
I'm never going to tell someone to smash their face in, though. I'm just not going to do that.
No, we wouldn't. We're not going to give beauty tips.
No,
we're never going to. We're never going to go there.
Me especially. But I'm just saying that it's almost besides the point now.
Yeah,
and their record proves it, and the popularity or lack of popularity of their biggest stars versus Clavicular, proves it.
One of the things
I just like saying the word clavicular.
I know that there's something about it. I think we got last week 1.2 million views on a story about positioning. If that doesn't tell you everything you need to know about media, nothing will.
Yeah. Well,
positioning.
Here's what I would say, and it's funny you mentioned that. I listen to a great podcast called Drinking Bros.
Yeah.
Right. Russ.
You listen to that all the time. You love that.
Russ and D'Anthony, Russ Hussman, and they're really smart. And D'Anthony is he's a special forces guy. He's a guy that, man, scares me just listening to him talk. But he's really smart. He understands economics and history. He's really sharp. But he was a serious guy. He's a seriously tough guy. Russ is hysterical and a great sort of host of the show I've been on. And they were talking about, for all the stuff that they sell right now, that sells, like what really sells on traditional media? Well, business news sells. But you can get 1 million views. Like the best rated show on business TV doesn't get 1 million views.
You told me, and we, because you work with some of these folks that have been around for a while. We don't want to say we're better than anybody else, but it was very surprising to me that
it's Russ Patterson.
Russ Patterson.
I want to get his name right.
But some of the folks that have their own stuff that they put out on X, that have been around a while, are very well respected people, and they get a couple 100,000 views, and we got 1 million too. So it tells you something, right? That if you do something that's different, and you do something that has good rhythm,
right,
good chemistry, and actually provides value.
And how do we provide value? Because one thing you're not going to get from TV news, you just don't get real actionable stuff. It's hard to unpack it. You don't have a lot of time. Commercials, Well,
it's a 4 or 5 minute segment, right? So, what are you going to say in 4 or 5 minutes?
I mean, you could say this stock looks great, that stock looks good.
Well, that's what they do, right? They get the analysts in. We can talk a little bit about Doug Cass if you want a little bit.
No, because he's a friend of mine, but I don't know why he's going off on CNBC.
He's going crazy on CNBC.
Yeah.
Why do you think he's doing that?
God.
Because there's by the way, I understand what he's saying.
I think he's fundamentally right about the pumping of the sort of like one way. He considers it a one-way street there in terms of just all like sort of stock promotion, and he's more bearish, and but I don't really want to comment on him because he's a friend of mine. I will just say this, but I just say this. I bash the competition all the time. I don't see it all one way on CNBC. I see both sides of the story. They have people like you on. I mean, you're not exactly, you're not like.
No, we're not pumping stuff. No, we're not. And we're trying to explain things. And, they have serious people on that show. They have the best the best a firm can offer is on those shows.
Yeah, I know.
So, sure. Okay. Maybe everybody has good years. Everybody has bad years. Everybody has good calls. Right. Everybody has bad calls. But to say that it's
bubble vision,
bubble vision and all that,
I disagree.
I disagree.
And by the way, I obviously I don't work there, so
right. Whatever. And we have no ties to them.
I will say that I break more news than they do.
Well, I would, I mean, that's what a 300 hitter does, right?
Yeah,
they
that's right.
they hit the ball, all right?
That's
You know,
right.
you know.
That's right.
So
Anyway, that's it for my headlines, Bob. And I know we don't have forever to talk, but we have some time here to unpack
let's
your
talk about
actionable.
Wendy's. Let's talk about, well, this week there's there's like 3 companies that are coming out with earnings, so we don't have any calls this week.
Okay.
Next week we'll have something because
Okay.
we've got the financials coming out next week, and we've got but we don't comment on the financials because a lot of them use our data. By the way, if a company is a client of ours, we do not comment, just so you know.
Do you provide the data on it?
We do.
But
No, we will do that. But if
But
they're in
not
the
on- not on the podcast.
not on a podcast near an earnings call, that's not what
Okay.
what we're here to do.
and that's what you should do.
Yeah, no, it's the absolute right thing to do. So one of the things that we've been talking about, data driving news driving markets. How about Wendy's?
The only fast food hamburger I will eat.
Okay, so you and a lot of people on Reddit really agree.
Oh, really?
Let's save it, right?
Okay. Yeah.
Stock is up. Look at this chart. It's a crazy chart. Okay, stock. Nelson Peltz and Trian was rumored earlier in the year. Like, I'm thinking about taking it private again, and he owned it. He spun it out. It was in bankruptcy. He bought it, et cetera, et cetera. The stock has been getting pummeled. It takes off and goes up, and you can see at the end of the chart, like 25% in a day off of a post on Reddit. And you can see the scale of longs to short. It's in battleground territory, meaning the number of active longs is almost equal to active shorts. So you've got a really volatile situation.
So this is
here.
a battleground stock.
Total battleground stock, and you have short interest very high. I think it's at a 10-year high at like 55 million shares, and you've got you can see here the short interest is way up, and then all of a sudden you had the stock price go up 25%. About 90 to 95% of the borrowable stock has been used up. So you've got a meme situation here.
Really?
Yeah. So keep this on your radar. You could really see this thing fly. Now, what we keep track of is, are there enough losses to light the tinderbox? Not yet, but you're close.
Interesting.
So this is something that's on our radar screen. Obviously, it's part of American culture. Where's the beef?
Yeah, I know. I love the food there.
And Wendy's
Is the food still good there?
I don't eat fast food.
I haven't eaten there in years, but
like McDonald's, Burger King, Wendy's. I don't do it.
As the last fast food burger I had was there. Yeah, it was amazing.
Amazing, right? So, but a lot of people do, and it falls into that meme-ish category where you have the Reddit community is like, we need to save this company because we love it.
Well, that's a meme stock then.
No, it is totally.
That's what they do.
We think it is. We think it is,
and they paid for it dearly.
No, we think it is. Let's talk a little bit about the memory sector, the DRAM ETF. So this ETF got to $10 billion faster than any ETF on record. Now, IBIT, it took like 258 days to get to 10 billion. I want to say this went to 10 billion in like 75 days.
Oh, really?
Yeah. And the short interest is now up to $1 billion. So why is that important? Well, what you're seeing in a lot of these stocks is that the amount of passive investment in the memory sector has gone through the roof. So if you look at something like Micron, Qualcomm. Well, Qualcomm's a little different because it supplies phones. But if you look at Micron, the amount of passive investors is very, very high. The amount of active investors has gone lower over time, and the short interest has gone through the moon. So the short interest in this DRAM ETF is almost at $1 billion. That's the fastest. We've been tracking this for a really long time. We've never seen short interest go higher.
Interesting.
So the whole memory / semi rally, there's a lot of skepticism. The active investor is pulling back. They're actually underweight the sector in the index. Yet the amount of short interest in the sector is at the index level. So what's happened? Passive rising, active longs falling, short interest rising, skepticism, and it's really the levered dollar is basically selling to the momentum dollar, and that's what's driving the stock price higher. So keep an eye on this. This has been on our radar screen, as well as SanDisk. We'll watch that. The other thing we want to point out, and Kelly Evans gave us a nice shout out on CNBC yesterday about this, is the amount of crowdedness in the healthcare sector. We think it's the most crowded hedge fund long right now.
You've been saying this. S3 data has been showing this for a long time.
For a long time. And if you look at the chart right here,
right,
you can see it's the most crowded since, I think, November of 2021. So what does it mean? When you see a lot of funds get into a sector, now healthcare was down 6%. It's up like 7% in the last week. So it's more or less flat. So the return hasn't really absorbed all the longs, right? The return is flat in the sector. Usually that means if there's a bit of a downturn, you could see a really big downturn. So keep your eye on this. This is a very crowded sector. A lot of people are along this because they see in the employment reports, where is the growth coming from? It's coming from the healthcare sector, and the jobs are being created there, and they're going long some of these stocks. But we are telling you that it looks like a pretty crowded long. Usually, if there's not growth, meaning return, people start to bail out.
Interesting.
And that's what we got this week.
All right, let's go to one stock, which I know is near and dear to your heart. It's a meme stock. It's called AMC. You always laugh when I mention. Why do you laugh?
Because I know what's coming.
I know why you laugh.
I know what's coming. Because I get tagged with this stuff, and I'm always amused by how good by the way, how good natured you are with all the kind of stuff that comes your way.
When you get tagged, you're partnering with a criminal,
the terrible person, and all these pictures and craziness, and
me fucking a goat and whatever.
I mean, it's unbelievable.
See, some of those memes are like,
no, it's crazy.
By the way, that was a meme. In any event, I'm kind of used to it. It doesn't bother me. I don't know why. It bothers a lot of people. I don't care.
No, I'm amused. I don't. Unless it's really like over the top, I'm amused. And I know you like to mix it up. So it's part of like the it's part of the atmosphere.
I tell people you hurt my feelings, all 1.1 of them. That's plural, 1.1. But here's the thing. AMC is up like over the last 6 months, like 20%. Like it went over the year to date. It's let me see, 1 year. What's the 1 year?
Well, it was the movie. What was the movie? The really low budget. Is the young directors, 21 years old, and it did way better than like the Spielberg. It did better than all the traditional.
Yeah, the Spielberg didn't do well.
It was like
here's what happened. So they had some. There was good box office.
Right.
The stock, after losing 99% of its value, right, fell to maybe $1, and started into about $2. I think we traded over $2.
Yep.
And then they started diluting again. And here's the thing. Listen, I actually like the CEO of the company, Adam Aaron. And one thing I will say about Adam is that he didn't lie to these meme investors. Now, did he court them? Yes. He didn't lie to them. I mean, all those financial statements, like big blue, this is trading above all metrics that it should trade. I mean, there's all sorts of warnings and stuff. And there was no shortage of naysayers like me. And not because I'm not short. By the way, I don't talk to a lot of short sellers. I mean, do you? I mean, I don't know. No,
we have never had an activist short seller as a client.
Yeah, I mean,
we just don't.
I usually like when they give me stories, I don't bite because I'm just like it's a little, and often they try to get you to write it. And I don't put Jim Chanos in this because Jim is just a technical analyst. I mean, what Jim is brilliant at when he shorts, he knows all the numbers, and
But that's different.
It's different. So, and he's public with it and everything.
There are a lot of hedge funds like that, but they're not
But
out there
I don't have
with
any,
public research.
yes, I have,
It's very different.
I have zero horse in this race. But I looked at the company, I look at its balance sheet. It's heavily indebted,
Yeah.
earning cash.
Yeah.
I don't care what you say. We don't have a box office like we had back in the day.
No.
Just because you can't. And when you have that much debt, this is, you're never going to make you probably do better with your money in a money market fund. It's not going to double. It's not going to go from 1 to 2, but over time, so the stock is now down like another, since they've been diluting, it's well off its highs. I mean, who knows what happens? Maybe there's going to be a blockbuster tomorrow, but you need a lot of blockbusters to make this company work good for shareholders. I'm not saying it's going out of business because they've diluted so much. They sold so much of this company. I don't know if it will. You know what I'm saying? I mean, they have willing buyers for the stock, as you pointed out before. And by the way, that's exactly what management should be doing. But I think what the shareholders, what these meme investors think is that they're going to get really rich on this thing. And they never were, unless you sold when it was at 70.
I mean, this
By the way,
is like as old as the markets are. They
70 with the reverse split.
Yeah,
is $700.
That's right.
Now, I was told by someone, a senior executive, that I shouldn't count that as a 10-for-1 reverse split. I don't know, which it was. It's really a 5-for-1 because there was some financial mechanics involved. But even at a 5-for-1, let's just say it was. I mean, we're talking.
Right.
We're talking. This thing is trading at I don't know, 40 cents as opposed to 20 cents on a pre-split basis, or less than 40 cents actually. I'm just saying that this is not a shareholder-friendly company, and yes, it's not out of business, which is a good thing.
Yeah.
But if you're an investor, should you be deploying capital to keep something out of business?
I've never really understood that whole phenomenon, but we're grateful for it because it really put us on the map.
It did.
It really did, right? I mean, that's how you called me. This is how you and I met.
Right.
It got us a huge following on X, and it made our data available to the world. So, I'm very conflicted on this, right? On the one hand, it's been great for our company. On the other hand, I would say to any investor, be very careful.
Yeah, and my only caveat, I don't want to be negative on this, because after it hit its low of $1, which again, on a pre-split basis, depending on how you measure it, is either 10 cents or 20 cents, however you measure it, there is, you could see there's upside potential from there.
Sure.
Right?
But you're betting, you're betting on people coming back to the movie theater. Are there better ideas to bet on? I think it answers itself.
Yes. Again, I like Adam Aaron. Adam had some health issues and he's feeling a lot better. I know, and that's a good thing. And he's a very capable CEO.
I think what he did for the company was great for the company.
Yes.
Whether we're shareholder friendly or not, as you just explained, is another story.
It is another story. Let's leave it there, Bob. It's baking here at 100 degrees here in
we have air conditioning and
in the S3.
We know what soap and water is. Yes, we do.
We're not in Italy.
We were looking very clean cut. I must say, our images say we're looking very good.
We both look good, and we're hitting a stride again, because I think people understand that we give you fair, balanced and fair commentary around data, which we don't skew the data to fit a narrative.
No, it is what it is. That's why Data Talking to News, I think, really resonates with a lot of people.
Right. So it's cold outside in crypto land. It's warm here in New York City. With that, I'm going to sign off. This is Charlie Gasparino with Bob Sloan. Catch us next week for another riveting edition.
Oh, by the way.
Yes, sorry.
One thing we have to do before we close.
Oh.
No, we must.
Okay.
We must.
What?
Because, first of all, it's July 4th.
Oh, yeah.
250th anniversary. This is the greatest country in the world. Only in a country like this could you and I start something from zero and get 1 million people to actually listen to you.
You know, it's really just shocking that schools, like, I kind of missed all this communist indoctrination in college. Like, that doesn't mean I didn't have left wing or liberal teachers, who I argued with, which allowed you to argue with them, by the way.
Yeah.
But I wasn't taught that America's bad.
Yeah.
Capitalism sucks.
Yep.
I wasn't taught that, everything's against you. I also wasn't a rich kid when I went to school.
By the way, today, did you see on the Empire State Building? This is why I didn't want to end the show.
Okay.
Just on a data note, I want to end on a country note. They raised the black flag of anarchy on the top of the Empire State Building. 2 morons.
Yeah, 2 morons.
And of course, this gets a lot of press.
Yeah.
But, try doing that somewhere else.
Yeah, listen, you can get away with that in certain places. I just wanted people to realize that I travel all over the country. New York and California, LA, it sucks up a lot of the energy because that's where media is located.
Yeah.
Traditional media, less and less so now, as we pointed out. That's why Comcast is breaking up. But that's not the country. This is a country where people of all races love it. They'd rather be here than any place else. It's the only. Why are people begging to come here? Why are people leaving Syria to come here, or Liberia, or I don't know, Somalia? Because it's so good here compared to where they are.
Well, look at Europe, and they're fighting over air conditioning because there's no growth. There's no innovation. Only in the United States. And one of the things that really, you know, I've talked about this. I'm really fixated on this particular issue. SpaceX down more. I think we called that.
Another $10 today.
We called that.
It's trading at the pop right now, right? It went
right
from
at
130.
the
It was
support price.
priced at 130, and it popped at 160, right?
That's right. So, but okay, so it's lost almost 800 billion, 700, 800 billion dollars worth of market cap over the last, let's say, 10 trading days. That loss is equal to the largest Chinese company there is.
Yep.
So it shows you why people are here. It's because only in this country could you create a stock where the losses are equal to the largest Chinese company.
And don't
Tencent is worth $800 billion for everybody's
what the left will
information.
say is like only a few people are making money. No, that's not true.
Read the Citadel report. It will tell you that actually there's a wealth effect going on that is affecting a lot of people.
Who do you think is building out AI centers?
And the propaganda around dirty water is very effective.
Yeah.
Don't believe it.
Yeah, I mean, who is building?
Don't believe it.
My father was an iron worker and a bartender. He loved rich people. Who do you think built buildings that he worked on? Who do you think tipped him when he was bartending? I mean, it was just, this is the way it works, and you need people that go out there and get paid for taking that risk. And I'm watching Twitter, the Ro Kohana, this congressman from all places, Silicon Valley.
Oh, he's just an attention getter. He just shows up. He's just an attention ambulance chaser. Puts his name against anything.
He's a good player in the Democratic Party.
He is, because he's realized that the only way to get name recognition is to basically show up where there's a fire.
I mean, it's really,
and any cultural fire, he shows up and says, "Well, I'm on the side of fire rather than the firemen."
The left is making Elon Musk out to be a criminal because he started a company that automatically had $1 trillion market cap because people bought it. And some of the people that bought it were pension funds that are supporting teachers and firemen and cops. You know that, right? The New York City pension fund,
yep,
or whatever pension fund. These people are sick. They've lost the narrative, in my view. They suck up way too much media attention. That's positive. It's really disgusting. And I just want to say that, for every, they're there and they're going to keep doing what they're doing, and we're going to keep doing what we're doing, fighting the good fight, because you don't have to be defeatist. You can win. It's the avenues are open to you.
optimistic. This
should
country is
be.
founded on optimism. We're optimistic.
So, again, one more point. I'm doing a story in the Post about how BlackRock, AT&T, Lowe's Corp, Google, Meta is the holding company for Facebook,
Yep.
are all throwing money from their charitable foundations, and some not from the charitable foundations, to train blue-collar workers. Why is that? Because we need people that are plumbers, pipe fitters, all this stuff, working class people to do this stuff, so we can build out the infrastructure.
Infrastructure we need because we're in a technological revolution.
Yeah, because that's the wealth effect.
Right.
Those people now, what are they doing it purely for to get a headline? A little bit, but for BlackRock, they're looking at a generation of investors, of retirees.
This is a real thing.
This is like they're going to make money off this, which is a good thing.
Yes, it is.
And so just remember, don't listen to Zoran Mandami and all these
Only in
companies.
America.
Because they'll lie to you about the nearest Chinese restaurant to get your vote. Not here at Risk and Return. Again,
Happy 4th.
Happy 4th, everybody. See you next week.